Good morning. Welcome back to Financial Issues. My name's Dan Seary. It's great to be here. It's great to be back in the studio, too, by the way. We've got some economic news coming out that's pretty important. We'll take a good look at that. Some of it, most of it, pretty optimistic in some ways. So we'll talk about that. Some good things happening from a growth standpoint. As a matter of fact, if you get a chance to take a look at the GDP number came out, and if you can see a printout of it in any way, newspaper, online, take a picture of it, because I think it's going to be a long time, maybe before we see a revised upward growth rate, GDP growth rate of 3.6%. Now, remember, I'm not going to dwell on this because I've talked about it 100 times. I'm beginning to think, since I'm the only one willing to talk about it or report on it, I'm just beginning to believe that it must just be me, because nobody has mentioned it. But I expected, obviously, I didn't expect 3.6 ever. Remember, this isn't the final look, but didn't expect a 3.6%, but did expect a 3%. Based on the way that we recalculate GDP. But I'm not even going to get into that. Now, 3.6%, here's a couple of interesting things. I thought we had gotten to a place, or maybe I was hopeful that we had gotten to a place, and I'm still hopeful today that by the end of the day it will be the case. It isn't right now in the futures. The knee-jerk reaction was that the futures turned a little bit more negative, not dramatically, but turned a little bit more negative. Now, the news that came out is very exciting to me in the sense that it would appear in some way that we are trending towards a economy that is finally recovering. Now, I'm still concerned about some things that aren't happening. But if someone were to ask me, do you feel more optimistic about the economy today than you did yesterday, I would say yes. I do feel more optimistic. So my attitude, anyway, I'm not going to say my analysis backs it up, but I'm going to say my attitude is trending towards being more optimistic. So for whatever it's worth, based on these numbers. So we get a growth revision up to 3.6% GDP growth. Now, here's the thing that I want to mention, because this is important to note. It was driven by a large buildup, as a matter of fact, the largest buildup since 1998 in inventories. Now, there's a number of things that tells me, it tells me that there are some stores that are concerned about inflation. I don't believe that retailers, wholesalers are naive enough to believe that the economy is improving in such a way that we can feel free to spend money on an unusually high amount of inventories. That's very unlikely. I think they're smarter than that. And the numbers kind of bear that out in a minute. But there's this unusual growth in inventories. As a matter of fact, that is the sole component that really pushed this GDP growth number up as high as it is. Now, we can't discount that. Now, maybe they're thinking, again, like I said, it's an inventory issue. It's an inflation issue, and they better grab a hold of some higher than normal inventories to try to be able to maintain a level of competitiveness when inventories, when sales begin to pick up. Now, here's the thing. First of all, growth could fall sharply in the fourth quarter. We know that. We'll have to wait and see. But stockpile of goods will likely be slower in the fourth quarter. Now, why do I say that? I say that because we all know this, because you listen every day, that the main component of the economy, of the American economy, the main component of the American economy is based on consumer spending, right? We all know that. Consumer spending has not gone up. As a matter of fact, it went from 1.5% to 1.4%. It actually went down. So we're seeing that number going in the wrong direction. So 1.4% decrease. So if retailers and wholesalers and durable good suppliers and such had an unusual stockpile of inventories because they believed that consumer spending was going to be unusually strong, they've already missed that. Okay, that hasn't happened. Now we've got the rest of the month here to finish out, but nevertheless, it hasn't happened. It doesn't correlate with the higher inventories. It would have been better had we seen higher inventories and the consumer spending to back up that there is some rationale behind those higher inventories. So that's not the case. Now, I'm giving retailers, I'm giving wholesalers, I'm giving manufacturers the benefit of the doubt when I say I think they're smart enough to realize that consumer spending isn't what the government says it is or would like it to be. We also saw a lower U.S. produced goods and services decreased. It was cut from 1.9% from 2%. So production in those goods and services were cut. Okay. There's a lack of correlation there. The growth of inventories was revised up to $1.16 billion from a preliminary estimate of $86 billion. That's an enormous number, as you can imagine. That's a huge increase. Business investment and equipment was also revised up to show the change instead of 3.7 drop. Well, of course. And we've got to look at what is the investment in. And it's obvious by these numbers, using the same numbers, that the investment, that business investment, and that's my favorite thing. I mean, that's my biggest thing. That's something I look at and have been looking at for a lot of years now since we have been supposedly in a recovery. Of course it's up because part of business investment is inventories. So you can't have that. If you had, $116 billion investment in inventories without that number going up, something would really be wrong. So of course it shows that. So I'm just saying I'm not real excited about that. It's not something that is a driver here. Export growth was reduced to 3.7% from 4.5%. Imports were revised up, which would stand to reason because, again, this goes back to the inventories number. So all those numbers tying in, all in all, I will say this. You cannot, regardless of how it got there, it's very difficult, if you believe the numbers, it's very difficult not to be excited about a 3.6% GDP number. Now, I'm discounting and taking into consideration that we've changed the way we've calculated. I get that. I understand that, of course. But nevertheless, 3.6% is got to bring some business and consumer confidence into the economy, not into the markets, but into the economy. And let's hope that happens. By the way, 866-300-9298, 866-300-9298. If you want to weigh in, this is a great day to be calling in. Get your financial questions if you have any questions in reference to the economy or any of the comments we make here, or, of course, your financial questions. So that's what's happening in the numbers. Very good. Now, along with that, we've got a jobless claim numbers drop by 23,000. That's great, obviously, but what's even better is that we're seeing the number for the week, first-time unemployment claims, drop to 298,000. That's a great number. That's a great number in a great economy. It's really a great number in a bad economy. Now, understand that, you, I would hope, understand that a great deal of this is based on the temporary job market. I mean, we know that. So tomorrow's job number just got a little bit more important. Tomorrow's job number. So anyway, we'll see how that goes. So that's what's happening in the first-time unemployment claims. That's a very good reading on first-time unemployment claims, a best reading. I think it may be the best reading. I frankly can't remember the last time we were below 300,000. I can't remember. I don't know when it was. I'm going to go out on a limb and say it was probably early 2008. I'm guessing, but I don't know. So anyway, that's what's happening. That's very good news. You get to hear me say and be a little bit more optimistic about the economy, not the markets, again, about the economy. I do think that even in the midst of an improving economy, if the numbers do start getting better, I still don't think you can make a case for the fact that the markets, the stocks are priced where they are. I don't think you can make a case for that. Here's the interesting thing about all of this. What's this going to do at the Fed meeting in another week or so? So the one of the Fed presidents from Atlanta came out and talked about it this morning and said, look, we are going to be talking about, this is Lockhart, talking about taper in December. So we could actually see the last week of December beginning to see some taper. And maybe that's why I'm thinking, and this is how I started here on this, maybe that's why we are seeing the stocks not really going up. That the knee-jerk reaction was negative, even in the midst of these very, very, very good numbers. Because they're thinking about tapering, coming off the table, not totally, but not bond buying totally, but tapering. And, I don't know what the taper would look like, probably something like 85 billion to 65 billion, 70, give or take. It's not going to be huge, but Lockhart, the Fed president in Atlanta's Fed president said he thinks it's going to be on the table. We're going to talk about it in December's meeting, which is another week or so. We could actually see it maybe the last week of December. 866-300-9298. Folks, I got a couple clips that I got to play. I want to talk about Obamacare, what is happening there, some very interesting things. I also have got to talk about this debate because I just got finished saying that the economy is looking pretty decent right now. I'm optimistic. But enter in now the debate over minimum wage. And we've got to give that some very careful thought. I'm going to give you some commentary on that. We're going to play a few clips. We're going to get to the phones. When we get to them, we're going to stay with them. 866-300-9298. If you've got a financial question, queue up your call. You're listening to American Family Radio Network, Financial Issues. I'm Dan Celia. We'll be right back.